Ladies and gentlemen, thumbs up if you can hear me. Okay, nice. Thanks for joining me today for this in-depth exploration of a critical aspect of ERP software customization in Odoo, meaning payroll localizations, with a small focus on the United States of America. So for those of you who might be familiar with the HR team, I am not Yannick, and he wasn't available today, so I'm glad to have the opportunity today to replace him for this talk. Today we'll walk through the intricacies of adapting Odoo to meet the unique payroll requirements of the United States. We'll start with an understanding of what actually it is to make a payroll localization and why Odoo is the ideal platform for it. Then we'll dive deep into US payroll regulations, and we will first design a strategy, explore technical implementations, discuss testing and quality assurance, and touch upon continuous improvements. So I'll let you 30 seconds to scan this QR code if you have any questions. As this is quite a technical talk, I would rather take time after and give you a complete written answer rather than do sort of the classic Q&A in an orally. So let's begin our journey into mastering payroll localization in Odoo. All right, to begin, let's define actually what is a payroll localization. It is the process of adapting Odoo to meet specific payroll requirements of a particular country, region, or state. So why Odoo, you might ask? Well, it's a robust and highly customizable ERP platform, making it an ideal choice for businesses of all sizes looking to tailor their payroll processes to their specific needs. So to illustrate how simple it is, let's look at the basic flow. So you log into Odoo, you click payroll, you click work entries, and this is what you might see in real life. So you have the employee scheduler, and here all the records are generated on the fly on the period that you land on. So in this case, we are on the month of October, but this can also be done weekly or even daily. If you go back in time, the work entries would be generated automatically. This allows you to recreate all your payslip history in batches. And for example, if you were to install Odoo after a long time of usage, you could generate a whole year of payslips in one go. So you can see here that we have 11 employees on a full-time schedule, so 5 days per week. We have 1 employee on a 4 days per week schedule. So you can see that some entries on some days are empty. And we also have an employee that works only a day a week. You can also spot some orange arrows. This means that those work entries might be in conflict, meaning that some employee might have taken a time off on that day. So we still need a human decision from the payroll officer to approve or refuse that time off. So if you click a card that had that yellow arrow, you would see this. And if you're, for example, a time off officer or a payroll officer, you can immediately here approve or refuse that time off. You get a pop-up with information about that period, a link to the time of request if you need to modify it, and 2 shortcuts, as I said, to approve or refuse. Okay, so we did that process for 1 employee. Let's say that we solve every conflict, and you would see something beautiful like this, where you can actually click on the top left, generate payslips. We do that, and you can see that we created a batch for all our employees. So we have here 13 payslips. If you're a payroll officer and want to check them one by one if everything is okay, you can click on the Smart button, and you would see the list, and you can check them manually one by one. If everything is okay, you can validate them in batch, and you're good to go. On the payslip itself, what can you find? Well, you have the covered period, you have a link to the employee contract, you have a link to the payroll structure, used to compute it. So here we have the CP200 of Belgium for the monthly employee pay. On the notebook itself here, you can see two parts. You have workdays. Those are populated automatically. So workdays are generated based on the previous scheduler that we just saw. So it is, for example, for this employee, we have 2 days of sick time off, 6 days of paid time off, and 14 days of attendance. Those days, based on their contract, correspond to a certain amount of money. On the second part, you have other inputs. What can this be used for? This can be used, for example, expense reports, salary attachments, or commissions. So if you have an employee and you want to add him a commission, you would go there, add a line, and add his commission for that month. On the second notebook page, you can see all the salary rules that were used to compute this payslip. All right, once we validate this payslip, the PDF report is generated and the job is done. So additionally, if you can use the documents application where every employee can access his own payslips through, on the top right, he clicks on his icon, My Profile, and he has all his payslips available in documents. Or for example, if you're a payroll officer, you can access all the payslips that exist for a company. Also, this feature is very useful to find documents back because the search feature can be used either on the name of the payslip or the content itself because everything is indexed. And last but not least, our amazing payroll dashboard that offers powerful analysis on what's actually going on. So on the first row on the left, you have a panel that shows warnings about invalid employee situations. What could that be? It could be a number of employees without a running contract. It would be, for example, an employee that takes a sick time off without providing justification. We don't want that. It could be employees without a valid bank account number, or recently we added the untrusted bank accounts, meaning imagine you have an employee, someone changes that bank account, this bank account would be turned automatically to untrusted because a payroll officer has to go and say, okay, this bank account is okay to use, so we take care of that. On the second panel of the first row, you see all the batches over the last 3 months so that you can easily spot what is done, what has to be validated, what is posted, what is paid. Going on the second row, first panel, you have a kind of a graph that shows you all your related employer costs. For example, social contributions, company cars, the total net paid to employees, etc. For example, here we see that September there is nothing. This is not normal. We have to fix it. We have to fix this. And the fourth panel shows you your employee trends, meaning how many are coming, how many are going. You kind of get an idea of how the flow of employees is going in your company. Oh, and also you have a small pad on the right where you can put links, where you can put questions, communicate with other payroll officers. It's kind of useful to have that. All right, so understanding US regulations is a crucial part. I know it's not the funniest exercise to read tax rules and regulations, but we have to do our homework in order to actually implement it into code. So I'll start by providing you a comprehensive overview of both federal and state payroll laws, as well as an in-depth examination of tax codes, deductions, and exemptions. Okay, so in the US, payroll works at 3 different levels. We have federal, state, and local level. For all those levels, there is income taxation plus other deductions requested by law. We have the following federal regulations and deductions that need to be taken into consideration when calculating payroll. You have the Fair Act Standard, okay, I have to read this. Fair Labor Standard Act. So this is a tax, but some employees can be exempted from it. We have the Federal Insurance Contribution Act. This requires a portion of the gross payment that should go towards Social Security and Medicare benefits for each period. And we have the Federal Unemployment Tax Act. So this is not the payroll deduction per se, but because it only applies to employers and not employees. And to comply with this tax, companies must pay 6% in taxes on the first $7,000 that you pay an employee in a year. So on the state level, we have, for the state of California, for example, those rules are divided into two sections. You have employee contributions and employer contributions and employee contributions. So for the employer contributions, we have the California State Unemployment Tax. So same thing as I talked before. You have to pay a percentage on the first $7,000 in wages paid to the employee in a calendar year. And you have the California Employment Training Tax. Those funds are used to provide training to workers in specific industries. On the employee contributions, you have the California Disability Tax. Those funds support workers who can't work due to non-work related disabilities. It also funds the paid family leave and the caregivers and for child bonding time off. And you have also the California Personal Income Tax, which is collected from California residents and non-residents who earn income in the state. It also depends on the income brackets, of course. And at the local level, we illustrate this with the state of New York, where we have a local tax, which is the Metropolitan Commuter Transportation Mobility Tax. And this tax applies to two types of employers. The ones required to withhold New York State income tax from wages, and the ones with a payroll expense above a certain threshold within the Metropolitan Commuter Transportation District. All right. So all the amounts are not taxable according to the tax at the federal, state, or local level. Here you have a small summary of which tax should be computed with what should be deducted, etc., etc. So this summarizes everything. And before jumping into technical details, we have to do some proper planning. All right, let's focus on the strategy to make a gradual implementation of a payroll localization. This approach ensures a smooth transition and minimizes disruptions. Here are the key steps. First step, you should do it one step at a time. This is very important. You don't go running marathons before you learn how to walk. So you take it one step at a time. Don't try to implement all aspects of a payroll localization. This can be very overwhelming and error-prone. So you start with the basics and build from there. What could be the basics? The basics could be you start with the classic monthly pay. So you should implement the classic monthly pay. This means calculating and processing the standard monthly wages. If you get this fundamental step before moving on to more complicated stuff, it should be good. What can we do next? We should add mandatory indications on the printed payslip. So as you progress, it's essential to add mandatory indications on the printed payslips because this ensures that your payroll documents comply with local regulations, as it's often a legal requirement to have some specific information on the printed payslip itself. And then you can gradually add complexity. Continuous improvement is the key to a successful payroll localization. Once you've mastered the basics, you can gradually start adding complexity. This might involve adding additional deductions, allowances, or certain bonus computations. And you always have to remember that payroll laws and regulations can change over time. So you always have to stay adaptable. This is crucial. Testing again and again and again. So throughout this process, rigorous testing will be your best friend. So test your payroll system after every new implementation or modification. This can help you catch errors and ensure that your solution remains accurate and compliant. Then what you can do, we can add declarations. What are declarations? They are a critical component of a payroll localization. As you expand your system, you'll need to incorporate various tax declaration and reports. This may include monthly, quarterly, or even yearly annual tax reports. Each declaration should be, of course, thoroughly tested before implementation. What you can also do is add integration with remote services. So this can enhance your efficiency and accuracy by adding those integration with remote services. This could involve like connecting with tax authorities or financial institution to streamline your processes like tax payments or direct deposits. Okay, so now that we know we have our plan, we are ready to dive into the technical implementation. So we'll get our hands a bit dirty with code right now. So I'll first start by presenting you the relevant models, and then do some kind of exercises where I take a tax rule and say, okay, we have this tax rule, how can we implement it? So the first model is the structure type. So this defines the global parameters of your payroll localization. For example, here it could be like Belgium classic employee. On this model, you can define the default pay period. Are you paying your employees daily, monthly, quarterly? You can define also the default working time calendar. For example, it could be a calendar of 38 hours a week. It's possible for an employee to have a different calendar, but globally, all the employees will follow this calendar. You can also define the way that the employee is paid. Is he paid on the worked hours, or is he paid a fixed salary each month? And finally, you can also choose the structure to use as regular pay, as structure types may have several structures. For example, you might have a structure about your end of the year bonus or commissions. Now, the second model of interest is the structure itself. A structure contains all the rules that could or should be computed to create the payslip lines and the name that will be given to the payslip. You can also decide to take the work days into account or not. For example, at the end, if you have a structure about your end of the year bonus, you don't care about work days of that month. This is a computation done over the whole year for that bonus. You can also define which work entry types. Work entry types are the little boxes that we saw earlier on the employee scheduler. Which work entry types won't be taken into account on the net salary. For example, you could have like unpaid time off that is not paid. And finally, you can define the specific inputs that will be added by default on the payslip. So you could have by default a commission applied at that moment or not. So here's what it looks like in XML, but I explained it orally, so we don't need to look at that. Okay, now we have the core of it. So the salary rule. This is what actually computes amounts and quantities. So on a rule, we can define a code, which could be, for example, federal tax, a name, and a category. What is a category? It could be an allowance, a deduction, and so on. You can also choose to display that salary rule in the PDF report or not. For example, if it should be hidden for the employee or not. You can also define the conditions to apply the rule or not, and also the rules to compute the amount itself. On a salary rule, you can also choose the accounting journal on which to post these accounting entries and specify a contributor. For example, social contributions are paid to a federal organism. Meal vouchers are paid to the voucher provider, and so on. Okay, so I talked about the applicability, and we have different ways to do it. The rule can either be always applied, so every time this rule is applied, or it can be based on a field and a particular range. For example, if the gross is between 0 and 1,000, apply this rule. Or it could be, if you have a really complex condition, just a Python code where you say, if this condition is met, apply this rule. For the amount itself, it's kind of the same logic. You either have a fixed amount, or you can have, for example, a percentage based on a field, for example, 13% of the gross salary. Or if you really need a complex computation, you could have Python code that computes the actual amount of the payslip. And for the quantity, it could be the same logic. It could be fixed, something you choose, or Python code. All right, now let's take a look at real examples of salary rules and how we can construct those with the models that I just talked about. So first example, healthcare in the United States, we all know it, can be very expensive. Like a single doctor office may cost you several hundred dollars, or an average 3-day hospital can cost you tens of thousands of dollars, depending on the type of care, of course. So that's why health insurance is one of the most sought after benefits an organization can offer. So the medical health benefit is a fixed amount that is subtracted from the gross and sent to an insurance company. This amount is applied on all the payslips and is covered by the insurance program. How do we do that? We have the contract. We define this amount on the contract itself. And now this amount is just taken from the gross amount, from the gross salary, directly in the salary rules. Here you see on the third line, medical, minus $10 that we just defined before. So technically, how can we do this? First, you go on the HR contract model. You would add a monetary field that defines this health benefit, this health medical benefit. So this is how you do it. Then we would like to regroup all the health benefits under the same category for reporting purposes, for example. Let's call it the pre-tax benefit with a code for easy identification. Here we set a parent category to it, which is the standard deduction. Why do we do this? Why do we do that? Because the net salary is actually computed as a sum of 3 components: the basic salary, the allowances, and the deductions. So this will be in the category of deductions. Then we have to define the salary rule itself. So let's discover the parameters one by one. The category is the pre-tax benefit that we just defined. Then we set a user-friendly name, a code, and a sequence. Here the sequence controls in what order your salary rules are computed. So here the sequence has been chosen to be computed just after the gross salary and before the net salary, of course. Then we define a Python condition so that the rule is actually computed. What is your condition here? It is this field in the contract? Then the result is computed using the code by setting the result as the negative amount of the amount that you just defined on your contract. And finally, we link this rule to the monthly pay structure. We have to admit that this is really not complicated, right? Okay, now let's take a bit more complex example. So we might have sales commissions. So those are sums of money that are paid after completing a task. Usually the task is selling a certain amount of goods or services. And employers can sometimes use sale commissions as an incentive to increase productivity. And also a commission might be paid in addition to the salary or instead of a salary. So in that case, the commission is an input that has to be encoded by hand each time the commission is paid. For instance, every quarter. For that case, we will use the additional other inputs that I explained just before. And you can see here that I decided to grant my employee a $5,000 commission in addition to her basic salary of $3,600. When computing the payslip, the amounts are simply summed and the payslip is computed accordingly. So from a technical point of view, how shall we proceed? First, you need to define an input type so that the salary rule can easily be retrieved so we can easily retrieve the corresponding amount for each input type. Here you can see that we restrict the salary input to US companies, and we also restrict it to the monthly salary structure. Of course, you can put whatever you want. The input cannot be used in an end of the year structure, for instance, or a Belgian company if we were to compute a Belgian payslip, because we just defined those conditions. And then we have the salary rule itself. You can see that this one is set in the standard allowances category that we just talked before. Net is allowances plus basic plus deductions, so this is in allowances. The rule is only applied if the commission code is present on the payslip inputs that we defined just before. For people who already worked a little bit on the payroll application, note that the input object is now a classic Python dictionary and not a browsable object anymore. We removed that for simplicity purposes. So once the input is found on the payslip, the rule is applied and we retrieve the amount plus the input description as a rule name. For example, if you set sales commission Q4, you would have in your payslip sales commission Q4 with the corresponding amount. More generally, for the salary rules, it can have 4 result parameters: the name, the basis, the quantity, and the rate. And the total is equal to the basis multiplied by the quantity and the rate. Okay, third example, more and more complex. Okay, so we have in the US the 401k contributions, which is a feature of a qualified profit sharing plan that allows employees to contribute a portion of their wages to individual accounts. It could be either a fixed amount or a percentage on the gross amount. In this case, we need to add 2 fields on the employee contract. We have a field saying the amount itself, another field saying, is this amount a percentage of something or is it a fixed amount? So the maximum contribution amount is capped to $22,500, but this value is only valid for 2023, and it could evolve in the future. But imagine we go to 2024. Do we have to go into code and change this amount manually? Of course not. Odoo lets you change all your rule parameters in the interface. So you would put your date field on the left. Where did this amount when did this amount start taking place? And you would put, for example, 1st January 2024, a new amount. So as I said, the yearly amount is capped. So that means that in the salary rule code, we will have to retrieve all the previous amount that were contributed in the previous payslips, and we have to check, has the cap been reached or not? The most efficient way to retrieve all we need, we do that in a single SQL request, so that we don't have to fetch the ORM multiple times. So the method is called on a payslip record set, and it expects a list of rules, a list of rule codes that we want to retrieve, a list of all the rules values that we want, and we could also say directly compute the aggregation sum of all that. So before diving to the computation itself, let's define the rule first. As for the health benefits, the rule is set under the pre-tax benefits category with a name, a code, a sequence after, so it's computed after the gross salary. It is only applied if the type is defined, meaning is the percentage or a fixed amount, and if an amount is actually provided on the contract itself. Once all this is applied, we state that the rule is computed using Python code, and let's discover the smart stuff that we have to write in order to compute the amount properly. So, kind of big chunk of code. So first, let's compute the expected 401k amount. So this is based on what we just defined, fixed amount or percentage. Then we will search all the pay slips for employees that we emitted over the year. We search for the pay slips that are in the state paid or done. We restrict the search to the pay slips that are starting at least the 1st of January of the current payslip year, and that ends before the start of the current payslip. So that way we have a certain amount, and then we check in the condition here under if the cap is already attained. If it is not, you put either the amount itself or what is left to reach the cap. And that amount, we of course take the opposite value and deduce it from our gross salary. So for something that is a bit complicated, we see that in a few lines of code, we can achieve the rule computation with all the robustness that we want. And of course, this is easily adaptable over time. You would just go to need on your you would just need to go in your interface, define a new cap for a defined date. Okay, let's see another example of salary rule. So the federal income tax can seem complicated on paper, but it's actually not. So on the official federal platform, you can find a document providing the computation steps according to the employee pay period. So to compute the federal income tax, you just have to convert the English into code. So we have the steps. We have step 1A is to enter the employee total taxable wage for this period. Step 1B, we have to enter the number of pay periods for a year. And step 1C is to multiply 1A by 1B. How does it look into code? We retrieve the amount for 1A. For 1B, we have a dictionary where we put as a key the contract schedule. This returns us the number of periods per year. And at the end, we just multiply those values. So very easy to translate English salary rules into Python code with Odoo. Okay, last example. If we take the Californian disability tax, which is only applied in California, we remember that we saw this table. So we can see for this tax that the HSA and the 401k are taxable for the disability tax. So you cannot deduce them. So how can we do that actually? Once again, we define a rule with a new employee tax category, a name, a code, and sequence. Then we decide if the rule applies or not according to the working address. Do we check, are we, is the employee a Californian resident? Once applied, we retrieve the taxable amount by adding back the HSA and the 401k amount because they are not deductible for this tax. Then we link the rule to the structure and so on and so on. We also specify here the contribution register, which is a classic Odoo partner ID. Here the Employment Development Department. Here it is the Employment Development Department of the state of California. So this partner is also used when generating the accounting entries to ease the account reconciliation process. Okay, now that we learned how to create and compute salary rule, what about attendances that do not grant the same amount, the same hourly amount than other attendances? So imagine we have some overtime that might be paid twice than the normal amount. To achieve this variable pay rate, we define here 3 new work entry types. 2 of them pay 150% the classic rate, and 1 of them pays double that rate. So how are the amounts computed in this case? So it is on the work entry itself, where we overrided the compute amount, and we check is this a specific work entry that we just defined? If it is, multiply that by the specific rate. Note that this will soon be gone because we will soon have rates directly on work entry types themselves. So you will be able to define everything in the interface itself without touching code. And last but not least, how do we link payroll to the accounting application? So this can be done quite easily by specifying on each salary rule the debit or the credit account on which we would like to post the lines amount. You can choose at the company level if you want to anonymize the work entries or not. If you choose to anonymize the work entries, all the amounts will be mixed together in a single account move per period with an account move line by salary rule. So currently, the only way to make batch payments is by generating SEPA payment files. If you are not in the SEPA zone or you wish to make payments in a different way, for example, cash or checks, for instance, you may want to disable this option. In that case, all the payments are done one by one from the payslip form, like for the expenses for those who already use the application. Okay, from a technical point of view, if you want to pre-configure the account distribution for your localization, you can link your payroll rules with the accounting like the following. So you define your method with the following name. So it should start with configure payroll account and ends with the code of the chart of accounts. Each time we apply a chart of accounts to a company, this method will be called to link the payroll as well if it exists. First, you list all the accounts that we will use. Second, you set the default account that is used in the case we have to create a balancing account entry. Then you define your mapping. For instance, we can link the Californian ETT rule to a debit and a credit account. Then we link the net salary rule to a credit account, for example. And last, you call configure payroll account with all the different objects that you use in the method, and it is as simple as that. All right, so the importance of testing cannot be overstated. So we'll discuss now strategies for testing and I'll share with you the best practices for debugging and troubleshooting your payroll localization solution. To achieve rigorous testing, it's important to write a solid Python suite so that you can easily spot the implications of a new feature in your payroll localization. It's important to ensure the stability of all the payslip line values in different use cases so that you can easily check if your change is breaking something or if that change will need that a certain behavior should be modified. So the correct way to test a payroll localization is to be as independent as possible from demo data. It's important to do it in another company environment to spot possible multi-company issues that could arise. Also, don't forget to limit the access rights from the user when testing to avoid basic root right errors that could arise in a real environment. For example, a payroll officer who cannot compute a certain amount because he doesn't have certain rights. Okay, here you see that that we work on a new company on which we load the US chart of account. You also see that we change the time zone of the current user. Time zone issues are one of the most complex issues to fix on a real database. So I'm sure you would like to spot these the possible issues that could come related to that, right? So then we define a work address in California and then a calendar that we use on the employee contract. You can use this method to generate payslips for a given period and also a given structure if you want. This makes sure that you correctly generate the work entries for that period and returns all the payslip ready to be tested. Then you use this method that takes a payslip as the first parameter and a dictionary with all the rule codes and the expected amounts. So this method ensures that we have the same number of payslips lines in our payslip and in the result dictionary, not more, not less. Then we write a test method for all the different cases that you could have. Here, for instance, we test a payslip for a Californian employee who is paid twice a month with a wage of $4,791.69 and 25% of 401k pre-tax contributions. We generate the payslip for the first part of January, and we assert that we only have one workdays line. No input, no additional input, nothing else. Then we check that the workdays line is correct, so that we have 10 days for 80 hours and a total equal to the amount that we just defined earlier. Then we define the result dictionary, and we call the validation method. It is very convenient because those tests are executed very quickly, thanks to the class method snapshot, and it allows you to add a test case every time you have to write a bug fix. By doing all that, you'll have a large test suite in no time. All right, so payroll regulations, as I said earlier, they can change. Staying ahead is key. So we'll now explore strategies for maintaining and updating your Odoo payroll localization to ensure ongoing compliance with evolving regulations. So we know that we should start simple. I said it earlier, one step at a time. We should gradually add new features. To illustrate this, here's a roadmap for the US payroll application. We already developed the W-2 form, which is a wage and tax statement. This is a document that summarizes the total wages of an employee for a year at the federal, state, and other taxes withheld from the paycheck. It is completed by the employer and shared with the employee to complete their tax returns. After California, we developed the salary rules for the state of New York. Then we improved the bank reconciliation process for the companies outside of the SEPA zone. After that, we would like to implement some local taxes, for example, in the state of New York. We will also develop an export mechanism for the ADP software that is commonly used for US payroll. And we will probably develop first the salary rules for Texas and Florida before the other states, but eventually every single one of them will come. And then we will improve the export for external filling and also develop some other declarations like the I-9 or the or the 940 and the 941 forms. So as I said, if you have any questions, as this is quite a technical talk, I would rather you have scan this QR code, write your question on the pad, and I will guarantee that you will have a complete written answer after this talk. So in closing today's presentation, I hope all that has equipped you with valuable insights into the intricacies of customizing Odoo for a payroll localization, especially within the United States. So whether you're an Odoo developer, a business owner, or simply ERP enthusiast, I hope this session has provided you with the knowledge and tools to navigate the complexities of payroll localizations and ensure compliance with your local regulations. Thank you all for your time. And that was it. I'll put you the QR code again if you have any questions.